recipes for technical trading success in Cook's Kitchen.
What a great time for a pullback so you can buy some of your favorite healthcare stocks. And I've got two healthcare innovators that should be on your radar and on your shopping list. First, let's check in with the broad market, with the pullback we're having because of the mythical trade piece that may or may not happen. So take a look at my chart here. Just showing you the QQQ. In late April, I started warning my people that we were getting awfully extended from the 50-day moving average. In fact, by, let's say, April 29th, we were over 6% above the 50-day moving average. And I said, you know what? That's not going to last. And if you don't use technical analysis, just think about it this way. This is all about mean reversion, right? It's not about using the moving average to tell you which way price is going to go. It's not about Fibonacci's or anything. It's just about at what rate has price accelerated. And if price keeps going at that rate, the 50-day moving average will also keep going up, but the idea is for price to come down and meet it. So this is a really simple way to measure an extreme overbought condition. When you get an index more than 6% above its 50-day, that rate of climb needs to settle down a bit. So I said, we're either going to get a 3% pullback in a week or the market's going to chop sideways. And I think we're getting a bit of both. If you take a look here back at the QQQ chart, yesterday we got down to we closed 2.5% off the 50-day. And so it's very healthy for this market. So what do you want to buy? Let's talk about that. I bought a stock for my healthcare innovators portfolio called Invitae, symbol NVTA. They do genetic diagnostics. A small company, like a $1.7 billion market cap, but growing sales rapidly. They're going to hit $250 million in sales this year. They just reported last night and missed on revenue. So the stock is down, and I think this is your opportunity to buy it. Let's take a look at that chart real quick, and then we'll talk about the earnings. So let me punch in NVTA for Invitae. And there you go. They did a secondary in sometime in the past 2 months. They did a $200 million secondary, probably right after the Feb earnings. So here's Feb earnings. Stock gaps up from 16, climbs up to 26. But that secondary was done around $19. So you see institutions coming in to support it. I think it's definitely a stock you want to add to under 20. I doubt it goes down and fills this February gap. Okay, so what is so important about Invitae is, the company's 23andMe and Ancestry.com. You can get a kit for $100 and get your genome, find out where you came from and who you are, and maybe some medical information. But you can't find out everything about medical conditions or issues in your genome from those tests. And so Invitae is medical grade genetic diagnostics. And so, looking at your propensity for cancer, cardiovascular disease, metabolic diseases, and the one key thing that just happened for the company was that they became one of 7 preferred laboratories for United Healthcare. So it's being covered by insurance because care providers know that if we can diagnose somebody as having the predisposition for a certain disorder, talk about time and money saved, right? So that's what Invitae does and why you want to have them on your radar. All right, my next healthcare innovator is Tabula Rasa Healthcare, TRHC. Also a small company, just about a $1.2 billion market cap. Here it is, the stock. The stock was at 90. In the past 6 months, and has come all the way down to the low 50s while revenue continues to climb. So this stock is trading. I'm sorry. Revenues are going to grow. They're going to peak 350 million next year. So the stock is trading like 3 times sales, and so that's another reason I'm really excited about it. Oh, I wanted to show you the sales growth. Let's back up here a second. Look at my screen. I want to show you the sales growth for Invitae, why I got so excited about it. Here is the sales growth that we've seen for Invitae. In 2017, that was 172% growth. In 2018, 118% growth. This year, they're slowing down a bit. And so on the conference call, analysts were a little worried about the 40 million print for revenue for the quarter versus expectations of 47 million. And there's a little bit of seasonality to this business. And there's also something called extensions versus billings, right? So in medical records, an accession is when a new patient record is created. Well, billing may not happen right on top of that. So they look for the growth in accessions, which is their reach out into the universe of people who've never had any genetic diagnostics done, and that's an enormous universe. I own Illumina, which is the institutional grade. They make the $1 million machines that research labs and that are even used for 23andMe tests. So they're cracking everyone's genome, right? But less than 0.02% of the world's population has had any genetic diagnostics done. So this is how rapidly this is growing. So I call Invitae the little Illumina. The sales growth is going to be a little bit seasonal, a little bit lumpy, but the company still thinks they're going to do 500 million in 2020, which to me, that makes it a bargain trading here at 1.5 billion. All right, back to Tabula Rasa. So let's take a look at Tabula Rasa, TRHC. I wrote an article on it for the Bull of the Day, and let's see if I can find that. It's a Zacks number 2 rank right now. Waiting for that to load. Okay, so here's Tabula Rasa, healthcare, Bull of the Day. Find this article, published it on May 3rd. Lots of good information. There's, I was telling you about the chart that, here's the green line revenue growing to over 300 million while the stock price comes back down to earth. I think it's sorting out a good base here. Looks like it could definitely go higher this year. And, here's one of the key things about Tabula Rasa is you may recall a company called Athena Health. They were also in medical IT records. Athena Health was taken private for $5.7 billion by Elliott Management, Paul Singer. So, I'm not saying that Tabula Rasa is going to trade on that valuation because Athena Health had more customers, but the two companies actually work together. Tabula Rasa systems are becoming embedded in Athena Health, and they're using all sorts of advanced technologies. I mean, the main way to think about Tabula Rasa is they're going to prevent a prescription screw-up. In other words, a prescription complication. So they go through, their AI systems go through all medical records and care providers' records and find out what are this patient's issues and what medicines have they taken, are taking that they should not take with some new prescription. So, that's their main claim to fame, but they're doing a lot of other things and creating new products in medical records. What else do you want to know here? They just keep making acquisitions. So read my article on Tabula Rasa, and then also take a look at the conference call for Invitae. If you can find it on, if you can find it somewhere, read the conference call. There's so much information in there from management, and then the analysts trying to dive into, how did you miss on revenues by 14%, and then still keep their guidance for hitting 500 million. They explain that well because of the rate of growth of their new accessions. They're going to diagnose, or rather do genetic diagnostics for 500,000 people this year, and they're going to double that next year based on their analysis of the market and the rate of growth and the way care providers are coming on, like UNH, and saying, yeah, we will cover this because we want patients to have access to their genome. All right, thanks for joining me in the kitchen.